Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and I am joined today with Nikos Kavalis from Metals Focus. Nikos, welcome. How are you doing?
Thank you. I'm doing well. Thank you very much for having me.
I last checked, and I think it was about 6 years since we last had you on. So,
Oh, wow. Is that right?
yeah, I've got to get to do this more frequently with you. Your company, Metals Focus, can you tell us a bit about your company?
Yeah, sure. So we're I guess you would call it a precious metals research consultancy. So we are a team of commodity analysts from different backgrounds that very specifically focus on just precious metals. So gold, silver, platinum, palladium, if we really have to, ruthenium and iridium. And we do a lot of work. We collect data, we create primary data on supply and demand for these markets. We produce a lot of reports. Some are freely available to the market, as I'm sure you've seen a few of those. Others are on a subscription basis, and we also do a lot of bespoke consulting work for clients, I guess similar to what a strategic consulting firm would do, but very razor-thin focus on precious metals.
Yeah, we do see some of your work in the Silver Institute and the charts that they put out. For the past 4 or 5 years, we're seeing deficit after deficit of silver, deficit hundreds of millions of ounces. Can you speak on that a bit?
2024 was the fourth consecutive year of deficits. We're seeing another one in 2025, and in fact, we do something we call the 5-year quarterly forecast for gold, silver, and for PGMs. And if you look at our silver outlook, we see deficits declining, but still deficits for the next 5 years through to the end of the decade. I think what we've seen is a very strong increase in industrial demand over the past decade. It's been up. I think I compared 2024 to 2014 before I came here for this chat, and I was even surprised myself that it was more than 50% higher overall. So we've seen that, and at the same time, supplies response or supplies increase having been a lot more modest overall.
With the demand, we have industrial demand, we have investor demand.
Mm-hmm.
Between those two, or if there are any other categories, how much would you say industrial demand takes up of that silver
Pie?
Yeah.
So industrial demand accounts for anything from 40-something to almost 60% of global demand. Investment, as you can imagine, is a lot more volatile. It's more price responsive, and naturally this leads to wilder fluctuations. In the last few years, we've seen it as low as 15-16% and as high as 25-26%. And here I should point out that by investment in our supply demand table, all that we capture within investment is bar and coin demand, so physical demand by retail individuals buying bars and coins. We don't include things like metal account. We don't include things like the impact of futures trading on the physical market. We don't include OTC derivatives, etc. The reason being that we see these as being either releases or additions or shifts in ownership of above ground inventories of silver. Whereas what we really want to count is what's actually taken out of the system or out of the liquidity and bought by, I don't know, an individual, taken home or put in a safety deposit box or in your beautiful facilities.
Yeah, we still have room here. Just let us know. We can make a space for you. We hear a lot of solar demand and how solar demand does involve silver paste.
Mm-hmm.
Do you see this really taking a larger chunk of that silver supply as we move into, let's say, renewables, solar, and even AI, which we may talk about?
So I would say that most of the growth, let's say the breakneck growth portion side of the development of the solar industry in terms of silver demand has already happened. We went from a market that was, I don't know, like sub 3,000 tons to something closer to 6.5 now. So most of the growth has happened. And this is mainly because we're, especially as prices have gone over the $30 mark, we are seeing a very aggressive effort by the industry to consume as little as possible per gigawatt of installed capacity. And they've been pretty successful, particularly in the last year and a half, in intensity of silver use, let's say, by quite sizable levels. So just to be clear, we still think that this will remain a very important element of demand, but perhaps not growing in the same sort of way that it did in the previous 5-6 years.
AI, artificial intelligence, the amount of energy it consumes, the data centers, and all these things is this industry looking to consume silver as well?
No doubt, both directly and indirectly. Directly in the sense that a lot of the components, the PCBs, the semiconductors that are used directly within AI-related equipment will contain silver, and indirectly in the sense that the additional energy infrastructure that will be required, they will contain breaker switches that have silver, bus bars that have silver, and other equipment that will contain silver. So yeah, we're pretty confident that the whole AI revolution is on balance very much positive for silver industrial use.
Okay, and we were talking a bit beforehand, and you had mentioned, especially when it comes to, let's say, mission critical types of components, that silver will definitely play a role with those.
Yeah, for sure. There's no doubt that silver, precious metals are a lot more expensive to use than base metals. So fabricators, component producers, or advanced materials manufacturers will always try to shift to cheaper materials when they can. And for example, we've seen that very dramatically with multi-layer ceramic capacitors. 20 years ago, they would have had a lot of silver and palladium. Nowadays, 99% of them are base metals focused. However, when it comes to mission critical applications, whether these are military, aerospace, medical, the higher cost of using precious metals components, whether these are high in silver, gold, PGMs, the case for spending the extra money is still there.
Just want to get back and touch on the supply and demand. When we see these 4 years of let's just say demand, supply did not match the demand, and let's just call it a shortage of sorts. Where does the silver then come from?
Inventories. So silver has been in a deficit for 4 years, but it was in a surplus for previous years, and historically there's been an accumulation of inventories. If you just look at London and New York, which is two very visible pools of silver inventories, and to combine, they account for more than a year's worth of demand. And then there's a lot of unreported inventories all over. For example, in China, there's an understanding that there's a sizable chunk of silver sitting there. So basically, every time we have a deficit, you have these inventories being drawn down. The gap, let's call it, or the shortage, as you very rightly called it, is filled by taking stuff out of vaults and supplying it to the market.
Yeah, I wanted to ask that question because how people see it is there's not going to be any silver left, where year after year there's not enough for industry to create products and these types of things, and they see it or interpret it as we're going to run out. There's no silver left. Should we interpret it this way? Is it wrongly interpreted that way?
So I think this argument is partially correct and partially questionable, right? So the correct part is, however big inventories are, by definition, they're finite, right? That's a fact. There's no two ways around that. So in that sense, if on the assumption that this deficit situation continues forever, eventually we will run out of silver, yes. we'll run out of silver inventories. Typically, though, what happens in commodity markets is as inventories are drawn down, the market becomes tight, price pressure develops. As price pressure develops, demand destruction happens. Demand destruction could come from, the point that I made earlier, that, for example, MLCCs went from most of them using precious metals to most of them not. It could come in the form of still using precious metals, still using silver, but using it a lot less. Or it could come from the more price elastic segments, jewelry or silverware or investment. You can't ignore the fact that the deficits that we've seen in the last few years have been, to an extent, reliant on investment demand, for example, in India and North America, being sizable. If we see sufficient price upside, you could see a scenario where some of these investment flows turn negative. On a net basis, investors actually start supplying rather than taking from the market. So traditionally, I've spent time in my career looking at different commodities. It's very rare that you get into a situation where the market runs out of any commodity. Take palladium, for example, a few years ago, and rhodium. It became very tight. The market responded, and look, the reality is there were other factors happening. Electrification also helped in the response, but the fact is that as the price went stratospheric, suddenly stocks were released, demand collapsed, etc. So this is what tends to happen.
Yeah, if I recall, I think it was palladium reached over 50,000 or something at one point.
You're thinking of rhodium. It reached over 30,000. Yeah.
Okay. Yeah. They changed it from palladium to rhodium. No, just kidding.
Well, the two are used together, so you're right. The two are often used in gasoline engines.
Okay, so just to clear up a bit, PCBs are the printed circuit boards, and the MLCCs, they're a type of a multi-layer capacitor that goes on electronics, and these things they're going to be looked to be used pretty heavily with AI. So just to clear that part up. Industry and let's say tariffs. Do you see the tariffs affecting the silver price or the demand? Because if let's say these products are quite expensive for industry to buy, then they may not produce as much of them.
Yeah. First of all, I should put out the Metals Focus, shall we say, base case. We are still hoping that cool heads will prevail and that let's say the most extreme forms of trade war that the market has been fearing will be avoided. But still, you are right in the sense that wherever we settle will definitely be a higher tariff environment than we had a year ago. Look, on balance, higher tariffs are not great for pro-cyclical applications like industrial, which are linked to industrial uses of silver. But I'm less worried about the direct effect, and what worries me most is the indirect effect that the uncertainty over tariffs is having on consumer sentiment, business sentiment, investment appetite to invest in segments of the market or certain parts of the economy that are good for silver industrial demand. So I think on balance, what we have now is definitely not great for industrial uses. Now, to what extent this will offset the positive trend, that's a difficult question to answer. We are still on balance positive about, so I think this year we see industrial demand no longer growing or tapering off a bit, but we're not seeing big declines. And look, you said industrial demand and also prices. I mean, we have to remember the fact that offsetting any sort of weakness or lack of growth on the industrial side that we have or risks from tariffs are, heightened appetite by investors to hold silver because of this uncertainty and because gold is rallying and silver tends to follow.
You just mentioned how silver follows gold, and we have seen gold running up pretty well. What in your opinion or your view, is causing silver to lag so far behind gold? Where we see gold hitting all-time highs like just about every month or so, but silver, it's not quite there yet.
Yeah, these past 12 months, there's been a few reasons why silver has been lagging gold. I think one is the fact that we have the safe haven markets, concern about systemic risks in markets, concerns about geopolitics, trade policy. All these factors are fueling safe haven demand. And let's face it, silver is part of the whole sort of precious metals package, but gold's role or gold's tradition as a safe haven asset is a lot more solid and a lot stronger than silver. So that's part of it. I think another part is we've seen a lot of interest from generalist investors, so macro funds. The kind of investors are not specialist commodity guys. And while it's easy enough for them to look at gold, silver is far too niche, too small, difficult market to understand. They don't have enough experience in it. Gold for many is seen just another FX pair. Finally, we've had very strong demand from central banks. And again, silver is just not part of that world. It's not an asset that most central banks can or do buy. So I think these factors and the fact that, we have deficits in silver, but we do have still a fair bit of, we haven't had enough time or enough years of deficits to really erode the above ground inventories that we have for silver. I think all these factors are what drives this underperformance and why the gold-silver ratio has been gradually going up.
Yeah, we've seen it go above 100 not that long ago. I think right now it's down to about 98, 99, somewhere around there. You expect that ratio to close down a bit further, maybe 95, 90?
I think it's all about timing. I think for the next few months, maybe even a few quarters, given the mix of factors that are underpinning gold, we may see it actually oscillate around that 100 level. But fast forward beyond that, let's say in the next few years horizon, we're pretty confident that silver will outperform gold and that the ratio will go down materially. Maybe not back to the all-time glory days, old glory days of silver, but we do see a material decline.
From the mining side, some of them say their ratio is for every 1 ounce of gold, they're getting 8 ounces of silver. Others, for every 1 ounce of gold, they're getting 4 ounces of silver. Does this equate into any of your research where you say, hey, wait a minute, the silver is really dropping off? And because it's pocket specific, every mine is different, but does that come into play at all with the supply?
Well, the thing is that silver, when it comes to mine supply, silver is so diverse. Silver comes, most of silver comes from non-primary supply, as you know very well. And given that it comes from gold mines, primary silver mines, lead zinc mines, and copper mines, I think it's very difficult to have this kind of reasoning of, well, there's this much when we're looking at an asset that contains gold and silver, there's this much gold, this much silver, so we can make some conjectures based on that, on prices or even demand.
Yeah, because I think that's pretty difficult where what might be happening in one mine is gospel across the whole industry where the ratio is 1:8, 1:7. I think that's it's difficult to say. But getting back to gold, I saw a report where by the end of the decade, they're looking at $6,000 gold and nice numbers. But in your estimation, from what you see through your research, plausible?
We're still bullish gold. We still think that, I think our targeted peak is at some point in the early part of next year or mid part of next year. I forget the exact point in time. We tend to have, in our base case scenario tends to be more conservative than that. We do have a bullish variant, which sees prices considerably higher, but still not quite $6,000 an ounce. But, I'm sure that these forecasts that you're referring to have some pretty aggressive assumptions in terms of systemic risks crystallizing. Yeah, under such a scenario, the gold's value is as much as it needs to be for whoever holds it to be incentivized to give it to you when you want to buy it. And a big part of this recent rally it's been just as much related to investors wanting to buy gold as those investors that are holding it not wanting to give it up. In theory, such levels could be achieved, but we would need quite an aggressive mix of macroeconomic factors that are extremely positive for it.
If I can ask, without giving away too much, through your research, your years of research, at this point in time, what trend do you see for silver being played out?
We're talking about prices?
Prices, or maybe continued demand, or
Sure. As I said, we like silver. We think that fundamentally the market will stay in a deficit for the foreseeable future. We do think that towards the end of the decade, as the market gets genuinely tight, so inventories are eroded sufficiently for price upside to be fueled by genuine supply-demand fundamentals rather than macro factors. We do think that the market will respond and will start, demand will start being cut in reaction to the higher price environment. So the deficits that will eventually start shrinking and will move towards a more balanced market. But that's very much a response to genuine physical tightness. The point that I made earlier, that commodity markets tend to sort of self-correct and normalize themselves over time.
So within your research, I'd imagine there's quite a bit of coordinating, quite a bit of probing, trying to get the numbers from various mines, I suppose. Is that how it works? Or?
Yeah, the mining side is in some ways the less challenging part in terms of sort of finding the information, because a lot of miners are listed, so they publish. So we have a team of geologists that grinds the numbers and follows what happens in the industry. The more challenging part is the demand side, where there just isn't publicly available data to analyze and to sort of put into models, or where there is, it's incomplete or needs interpretation. And that's where most of the work that we do, so most of the headcount that we have, focuses their energy. We do a lot of field research. We keep in touch with industry players across the board, whether these are banks, trading houses, fabricators, specialist companies that sort of produce advanced materials, investment companies, buy-side dealers, etc. And we try to collect information from all these guys and put it all in our model and generate our supply-demand figures.
And then the less glamorous side, the recyclables. Do you see that part possibly growing as well as the silver price tends to move up a bit?
So we do actually see recycling increasing over the next few years. Part of it is perhaps related to the price encouraging more higher recycling from the higher grade segments of the market, whether this is jewelry or silverware. But maybe a bigger part is growth of low-grade recycling, e-scrap recycling. And I think that part of the market is more than anything fueled by legislative efforts and environmental efforts to reclaim some of the materials that have been used in historical electronics components and so on and so forth, reclaim them and bring them back to the market and reuse them. There's no doubt that there will be an increase in the absolute volumes of electronic scrap that's recycled. This will be partly offset probably by lower grades of precious metals that are found, which are related to the historical efforts of manufacturers to use less and less expensive materials such as silver, gold.
Okay, I guess that would take me to the health of the miners, where we see Mexico producing a lot, we see Peru producing quite a bit of silver as well. The rest of I shouldn't say the rest of the mines, but the state of the health of silver from these mines and maybe others, they're still producing at good volumes, good levels, or are we hearing any not producing as much type of a thing? The supply side still good?
Yeah, we do see some growth over the next couple of years of mine production, but there is, no matter how healthy the price is, there is also the question of, have we discovered new assets to take advantage of and produce from? And I would say that the growth in mine production that we're seeing is quite modest, and in fact, actually, later in the decade, we do see production tapering off somewhat.
New explorations going on, because I understand from exploration to actual production can take 5, 8, 10 years or so.
Yeah, and when it comes to silver, as silver is mainly a byproduct metal, the main question here is, are there new assets coming on stream for lead, zinc, copper, gold, rather than specifically primary mines, which account for the minority of global production. So yes, there's always explorations, but the question is, do they result in discoveries? And do they result in viable operations? And going back to the earlier comment, yes, there is some increase expected, but that will be limited.
So we're not running out of silver just yet. We haven't gone over the cliff where there's no more supply of silver coming in just yet.
No.
Okay, that's good to know.
I think the main question in terms of running out of silver is how big the deficits will be vis-a-vis how much undeclared or unreported inventories there are in the market. So nobody really knows how much above ground stock really exists. Our projections are that deficits will be sizable for the next few years. So we probably, our expectation is that we'll start seeing shortages, or we'll start seeing tighter market conditions in 2 or 3 years' time from now.
Nikos, we hear the phrase, the electrification of everything. In your view, is this going to continue to be a growing trend?
Yeah, absolutely. Very clearly, the world is getting more electric, particularly on the vehicle side. And that is no doubt very positive and an area of growth for silver industrial demand. Look, everyone talks about the solar industry, PV demand, and rightly so. It's very sexy. It's enjoyed tremendous growth in recent years. But we shouldn't, in that process, ignore another very important segment, which is silver use in automotive applications. And that has benefited tremendously from electrification, because typically a battery electric vehicle contains a lot more silver than an equivalent internal combustion engine vehicle. And more generally, cars today contain, whether ICE, internal combustion, or battery electric, contain a lot more silver than cars did 10 years ago, because they have a lot more components, even internal combustion ones, sensors, navigation systems, etc., that all contain silver. Now, in addition to this use within cars themselves, growing use of silver within cars, as the fleet gets increasingly electrified, these cars have to be charged somewhere, and that infrastructure as well will require growing amounts of silver. Whether we're talking about the actual charging points, that they will contain silver, but also further up the chain of distribution, to supply the electricity to all these new outlets, the infrastructure that is required will also contain silver components, and that's also a very important area of demand growth going forward.
Okay, so fair to say we will see some investment demand continuing to grow for silver.
Yeah, look, last year was difficult for physical investment, for bar and coin demand. We had some pretty hefty losses from Western countries, partly because gross demand was lower, partly because you had a lot of buybacks. Investors were basically liquidating their positions, taking advantage of higher prices, in some cases because they had been disappointed that silver hadn't rallied faster than it did. I think this year we're looking for a bit of a recovery, particularly from Europe, that has bore the brunt of the declines over the past couple of years. In addition to all the other factors, we've also had the VAT issue, which I'm sure you guys are acutely aware, also hitting European demand hard. So we see a bit of a recovery in Europe, and the losses that we were seeing in the US and India, the two biggest markets for silver bar and coin demand, we're still seeing some losses, but a lot more modest than we did in the previous years. So 2025, we're fairly positive, fairly confident that we'll see a decent recovery.
All right, future is still looking pretty bright for silver. Nikos, can you let the viewers know how they can follow you and, of course, your website to get more info?
Yeah, sure. Please have a look at metalsfocus.com. And please get in touch with us if you're interested in our work, or for those of you that use Bloomberg, you can also find us on our dedicated Bloomberg page, MTFO Go. A lot of our research and data is also available on that platform.
All right, Nikos Kavalis from Metals Focus, I want to thank you for your time, and appreciate the info that you've given us.
Thank you.
Hope we can do it again soon.
Thanks a lot.
That was Nikos Kavalis sharing his views and insights on silver. To get more of Nikos' views, please go to www.metalsfocus.com. If you like this interview, please do subscribe, share, and give it a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.